So a USDA loan, zero money down, right?
Yep.
Wow.
So here's the thing about rate forecasting. They're like weathermen. They're going to get it 50% right.
Yeah.
So just go ahead and toss it.
100% correct.
The easiest way to understand that rates are coming down is just look at gas prices.
I'm going to look directly in the camera right now, and I'm going to tell people something that is very, very important. And I stress this to a lot of people. Welcome, welcome. Welcome to another edition of the Bill Rhodes Real Estate Podcast. I am Bill Rhodes. Today, I am joined by one of my favorite mortgage lender partners and a longtime friend of mine, Trey Bonnette with Cross Country Mortgage. Trey, thanks for being here today.
I appreciate you inviting me.
Awesome. Well, today, I'm excited that you're here because one of the things that I get asked a lot of times in the real estate world and the transaction is, what about the financing? What about the lending? And I think there's a lot of, I wouldn't say misinformation, but there's a lot of unknown information. And let's dig into some of that today and really get out there and get some good information so people, when they go and they are ready to purchase a property, maybe they're buying their primary home, maybe they're buying an investment property, you can handle all those kind of scenarios and situations and help them out. So today, I want to dig into some of that. So if you want to just introduce yourself, tell us a little bit about what you're doing, how long you've been in the mortgage, and what kind of things you like to do.
Yeah. Name's Trey Bonnette. I've been in the business for going on 11, 12 years now, I guess.
Wow.
Been in it for a while. Started at the bottom. Started as an assistant. Worked my way up. Got into the back-end operations. Got into processing. Did all that stuff. So I do know my way around a loan.
Okay.
And I've been fully a loan officer for at least 8 years, I think, maybe 9. But I've been enjoying it. It's been a kind of a roller coaster the past couple of years, but it has been fun. There has been a lot of changes in the past 3 to 4 years due to COVID, but now we're out and we're getting back to some normalcy.
Okay.
And we just need the rates to be normal.
Well, that's one thing. If you just mentioned the rates, let's talk about that.
All right.
How has the interest rates affected our business?
It has definitely decreased the purchasing power of quite a few folks.
Okay.
Until we see a decrease in rates, it's still going to hurt a lot of folks. Now, granted, even though the rates are higher, I would suggest to go ahead and make your purchase.
Sure.
Because you could always refi. There's nothing against that.
Mm-hmm.
So even the pain may be temporary, it's not long term.
Sure.
So you got to think about that on your purchase.
And I tell people that all the time. Listen, this house, maybe the house they want to buy, is unique. Okay? There's not going to be a lot of opportunity to buy a unique, special kind of property. And the rates will fluctuate, but the properties are going to stay the same. One thing I think, too, is I think that if and when the rates go down, I think there's going to bring a lot of buyers out from the sidelines that are going to increase competition. And then what does that happen? Then happens next is it increase the prices because the competition goes up. So I know you don't have a crystal ball. We all like to pretend that everybody knows what's up. We were reviewing some of the information from 2024, some of the early January, February forecasts. Totally wrong. So it is totally a guess, and nobody's going to hold us to this. But what do you think is going to happen? We had the presidential election just happen. We're going into the holidays. I think we've got a huge change that's going to happen in 2025. What do you foresee?
So here's the thing about rate forecasting. They're like weathermen. They're going to get it 50% right.
Yeah.
So just go ahead and toss it. I do think rates will come down. How far they come down right now is a guess. I do think that we will see them come down at least a point.
Okay.
You know, people always ask about that, and it's a hard question to answer, but there are factors we have to look at. And as a loan officer, honestly, a good loan officer will be tracking those somewhat. Sure. I think that we won't see it until spring to summer, though.
Okay. What are some of the forecasting tools that you guys use? I mean, do you look at the stock market because everybody looks at that? That's been on quite a rise lately. What's one of the things that you guys kind of monitor that can maybe predict that maybe somebody out there that's online can look themselves and start forecasting?
Look at the 10-year.
Okay.
10-year treasury.
A 2-year treasury.
Mortgage rates run inverse to the stock market.
Okay.
Is the best way I could put it. So if the 10-year Treasury goes down, our rates are going down. That means, layman's term, people are leaving the stock market and they're buying bonds, which are Treasury notes. That's going to drive our prices down because that increases the scarcity of bonds.
Okay.
Stock market goes up, they jump out of bonds, go back in the stock market because that's where they think they make money. The easiest way to understand that rates are coming down is just look at gas prices.
Okay.
If you think about it, gas prices go up, rates are going to go up. Prices go down on gas, rates are coming down too. So that's the other easy thing to look at.
Okay. All right. I've never heard that before.
Yeah, I mean, it's weird. But yeah, if you go look at it, and since gas rates are staying steady, and they have been for the past 2 months, our rates have been really right there, except kind of a month where we went up. But before they went up, gas was lower.
Okay.
So that's the layman term for me to put is gas.
Right.
Let's see what happens.
Okay. So we think 2025 is going to be better for the buyers.
Mm-hmm.
All right. So what does, at Cross Country, do y'all have like a specialty? Is there a certain customer that you guys can service, or are you guys kind of a one-stop shop for any kind of thing as far as investing, refi, and of course purchasing?
So we have outlets for everything. Now, if we have to go to an outlet, that means we're probably not as strong as we should be in it. But we have the ability to get to that lender.
Okay.
But yes, we are a one-stop shop for most loans.
All right.
Anywhere from Govy to conventional all the way over to non-QM. Non-QM is going to be for the people who don't want to show income. And so we go all
that's
there.
non-QM, that's not a non-qualifying mortgage. Okay.
And
that was for self-employed maybe? Okay. People that do a lot of cash business?
Yes. So we will dive into those, and those are a little looser on the guidelines, and we don't have to use the traditional income. So we'd go by bank statements, a 1099, something like that. But we'll figure out how to get you in the house with that documentation instead of going the traditional route.
Okay. What is kind of cross country? Is there a client that is your like bread and butter client that you guys maybe have a special program for? Do y'all have a special program for maybe first-time home buyers, first responders? I know years ago there were things like that. Can you kind of give us an overview right now of what's out there for
So first-time home buyers are always going to be the forefront for everybody.
Okay.
Everybody wants to get in the house because it honestly is the best way to build wealth, in my opinion.
100% correct.
And that's one thing you got to think about because there's no equity in rent, really. None whatsoever. So we got to figure out how to get a first-time home buyer in a house. So there are programs out there. We carry 2 to 3 really good ones.
Okay.
And then there are some that come in and out during the year because they're grants from the government.
Okay. Can you give us a point or two? Can you give us a little insight on what maybe that would do to help the first-time home buyer? Is it cash assistance at closing? Is it a lower rate? What will the actual consumer see?
So the consumer will see a decrease in rate. They'll see a decrease depending on the program. Mortgage insurance, they might see a decrease in rate depending on how much we can put towards points if we have to. They will see a decrease in down payment because most of it, they go to that. So we've got projects that range from giving $4,000 to the client all the way up to $15,000.
Okay.
So it just depends on what factors play involved to get you into that house and how we can basically put you in those assistance programs boxes.
Okay.
That's how it works.
All right. So you can help out people that are with down payment assistance, maybe lowering their interest rate, which would in turn lower their monthly payments. PMI, which is private mortgage insurance, you can help them there. Okay, well that's a lot of good things. And I think that's really interesting because I think a lot of these first-time home buyers, they are so nervous. They don't have this is the first time they've done this, so they don't have the experience. And I think having something like that available to them is really nice.
I agree, and it's surprising in this day and age how many people we still run across that think that you have to have 20% down when really maybe there's a way we can get you in there with zero down.
Right.
And it's just still kind of mind-blowing because the information is not fully out there until they make that call.
Sure. And I think a lot of people are afraid to call. Here's a question for you, and I've had this posed to me many, many times. If we write an offer on a house, first thing I say, well, but really before that, I say, hey, we got to get a pre-approval letter. If somebody calls you as the mortgage lender, does getting a pre-approval letter affect their credit?
It's a yes and no answer.
Okay.
So with the cost of, short answer, no.
Good.
Long answer, yes. Okay. I guess is the best way to put it. As lenders, as long as you're in a 2-week window, you can get it pulled by multiple lenders and your credit score will not move. If you come out of that window, there's a good chance you will see a 2 or 3 point drop in your credit score, and it will take 30 to 45 days to come back.
So if we're actively about to buy a house and we're about to move forward, basically, correct me if I'm wrong, but we have like a 2-week window that they can go to a mortgage lender, maybe shop a couple, maybe their friend's a lender, maybe that use some of my preferred lenders that I send them to. In that 2-week time, there's really not anything that dings their credit.
No, that one hard pull from the first lender, that's going to be their ding.
Okay.
The rest of them for that little window will stay the same. Now, the only exception is when you go out of that industry. So if you're a first-time home buyer and you get a wild hair and you want to go purchase some furniture and put it on finance, which we do not, I want you to do, that dings your credit because you're outside of our industry.
Okay. I'm going to look directly in the camera right now, and I'm going to tell people something that is very, very important. And I stress this to a lot of people. If you are in the process of buying a house, if we go look at a house on Saturday and we write an offer and we submit that offer and it goes to your lender and it's accepted and it goes to the attorney, do not go buy furniture on credit, a car on credit. Do not change anything. The joke I tell people is do not buy anything bigger than a cheeseburger until we close. After we close, you can do anything you want. I'll tell you a quick story.
Or call the lender.
Or call the lender. That's right. Years ago, I was working with this family, sweet, sweet family, and we had been out for a couple of weeks and we were looking at houses, and we had an appointment on a Saturday to go look at 3 or 4 more. Well, I get to the house a few minutes before they arrive. Man, here they come. Absolutely gorgeous, beautiful white F-150 pickup truck, all the bells and whistles, and they come piling out. You may even know who I'm talking about. This happened a long time ago. I think you did the loan for them. And I said, hey, guys, how's it going? And the husband looks at me and he goes, how you like my new truck? I said, I don't like it at all. Literally, we had to wait. I think it was 12 months. Or maybe even longer. We had to wait. It was a long time. So if you are in the process, do not buy anything on credit. Do not change your credit situation. Do not change your debt to income ratio. Do not do anything like that if you're in the buying process. All right.
True story.
Yeah. I think you did their loan.
I'd have to remember.
I know.
That tells you how long I've been doing it.
I know. And we've been friends for a long time.
Yeah.
I'll tell everybody how we met. We met years ago when I was playing music.
That we did.
And you were in the restaurant entertainment business, and you gave me a lot of gigs and a lot of shows, and we had a lot of fun.
A lot of fun.
Yeah. And now here we are all these years later, and we're still doing business together.
Yeah, we're still having
And I
fun.
love it. One thing I always like about you, Trey, is you always take good care of my clients. And that's the number one thing that I look for, because that's what I try to do every single day. All right. Tell us about the down payment, okay? So you mentioned that sometimes, or most of the time, you don't have to have 20% down. What are some of the specific programs that you can talk about that people don't have to have the 20% down? What is some way they don't have a lot of cash on hand?
My first go-to always is let's look at USDA.
Okay.
Just because that's a zero down program. It's an easy program as far as there's no program's easy unless.
So a USDA loan is a loan from the government that specializes that you have to be in a certain eligibility area, more for rural properties.
But here's my people are always like, I want to live in the city.
Right.
Okay, well, where's the city start to you?
Sure.
I live in, I don't know, let's say out here in Furman. Well, does that Greenville for you? Well, yeah. Well, the USDA, it's USDA. Okay. Oh, well, 5 minutes outside the city. Okay. Well, here we go. Let's go look at that.
Yeah.
That's my biggest thing. I was like, because you can be 2 miles out of the city and qualify for USDA.
So a USDA loan, zero money down, right?
Yep.
Wow.
And then we have our other ones, other assistance programs, but we also have a 3% first-time home buyer. Or if one person is not a first-time home buyer and the other one is, still can use 3% down.
Okay.
We got our 5%, which is kind of standard, 3.5%, which is a FHA.
Yep.
And then we just kind of climb from there, depending on what your situation is and what you want to put down.
FHA, USDA, and a VA are government-backed loan programs. Do you find those are harder to process? Is there extra steps involved because you've got the government?
There are extra steps involved for the government, and a lot of that has to deal with the income situation and the appraisal side.
Okay.
Other than that, they're about the same.
Okay. Does it increase the time if you're going to use a VA loan? Should you expect more of a time between contract to close? Do they need more days?
It only depends if on VA for me, if they already have their DD 214 for the VA or their VA benefits. Because if not, and they have to apply, that might add an extra week.
Okay.
Now, USDA is the one that we always ask for a little extra time because it has to go to USDA. They have to approve it. And sometimes their backlog being able to take 4 days to get it back to us.
All right.
That's the only one that we ask for a lot more time on, just because of that reason.
Okay.
But other than that, 30 days is going to be your kind of your average standard time.
Do you find now that appraisal time has shortened? Because I know for a while back there, we were really backed up on appraisals.
Yep.
Appraisals and appraisers in our area were hard to get done in a short amount of time. Do you think, has that eased off a little bit since?
It has. I think we've cut that down by about 3 or 4 days.
Okay.
And so, they're coming back quicker.
Okay. Well, that's good. That's good.
And they're coming back good, too, so I can't.
Do you see low appraisals because we've had such a ramp? Greenville, we kind of had a steady climb for a lot of years. Then in 2020, when COVID and all that mess happened, we saw a pretty big ramp up in affordability and pricing. Do you feel that the appraisers have kept up with that ramp up? Or are you seeing low appraisals because it seems like we've had a kind of a really rapid increase in pricing? Are the appraisers keeping up with the market?
I think our market is keeping up.
Okay.
Appraisers are going to appraise based off of market, right? I don't think that our market has really decreased compared to some of the metropolitan markets.
Yeah.
And for that reason, I think that ours is going to stay steady, and we're not going to see a large decrease in appraisals. I think that because of Greenville's pocket in our area, with all the jobs coming in and out and the people coming in and out, that we're going to stay pretty much steady on that, and we're not going to see a decrease.
Okay.
Which leads me to say, find the house now, refi later.
Yeah.
That's kind of what my thing is.
Because the house is still going to be the house in 2 years. The loan product, the interest rates, all that can fluctuate. But you're still in the same house with your family, living and doing your thing. All right. So let's just recap real quick so everybody knows. We got an FHA loan. Mm-hmm. We got a VA loan. We have got the USDA loan. And we've got everybody's favorite, the old conventional loan.
Yeah.
Those are like your standard 4 products that you base.
Those are going to be our standard base products.
Okay.
It's really when we get and dive into those products that we find the little peripheral, I guess you could say, products.
Yeah. Okay.
Which are going to be like your renovation loans, things like that. Which is, to me, right now, should be a utilized product, and it really is not.
Okay. Do you want to talk about that?
Yeah, we can talk about that. So
what's that called?
It's either going to be, so VA has one, or the VAs, but it can only go to, and USDA has one too, but they can only go to a certain amount.
So this is a loan that if you go out there and you find a house that needs work, you want to buy a fixer-upper.
Yep.
There is a loan program that you can get somebody into that they can buy the house. Then what happens after they buy the house and they need the funds to renovate the house?
How that works is we get a contractor out there. They kind of see what's going on during the process of the loan approval.
Okay, before we close.
Yes, anyway, but we base the loan amount and everything off the completed project. So if the house is $100,000 and it needs $150,000, we base all your documentation off $150,000.
Okay.
Now, the beauty of these products is to really give you equity as soon as you close. And it also allows you to get into a home, maybe an area that you really want to be in that could be not out of your price range, but it's not the nicest house on the block in an area you want to be in. This allows you to do that without having to go after you close to a contractor and say, I need this done. And they're coming back, well, I need $50,000.
Yeah.
Well, now it's based in your loan for 30 years.
Wow.
And so it cuts down that out of pocket.
So let's just say you bought that $100,000 house and you got a $250,000 loan, right? Mm-hmm. Just for round numbers. Where is that other $150,000 hanging out? Is it in a checkbook, in a checking account?
So how it works is it's going to see sitting in an escrow account,
okay,
run by the lender.
All right.
And every time something gets completed and the contractor needs a draw, he will ask for a draw.
Okay.
The inspector comes out, meets the contractor, walks through the house, takes pictures, makes everything that he says is completed. Inspector calls the lender, says this is completed. We send a check out within 24 hours. Both parties have to sign so that it gets marked off.
Okay. All right.
So there's some checks and balances in there.
I was about to say that keeps people from doing that kind of stuff and then pocketing the $150,000 and then the house never gets fixed and then you got a problem. Mm-hmm. Okay. Well, that's pretty cool.
And it works wonders. So
what's that called?
So conventional is going to be a home style renovation.
Okay.
FHA is going to be a 203K.
203K.
And won't be or home style, and then and then the USDA and the scope renovations.
Okay. Well, that's really interesting. That's a really cool product. I don't think a lot of people know about that.
They don't. And it's kind of crazy, especially when you move into a historic neighborhood or a neighborhood that's on the fringe of being turned around. It's a good product to go into that neighborhood.
Speaking of that, is that kind of renovation loan available to investors?
Yes, but it starts at 15% down, but you want to put 20 down just for the rates.
Okay. So as an investor, if you found a $100,000 house and it would be a $250,000 fix-up, you'd need 20% or you'd want 20% to keep your loan down.
Mm-hmm. Yeah, because you want to return at the end of the day.
Sure. As an investor, you got to put all those numbers in there and make sure everything works.
Yep.
But investor can do that.
Mm-hmm.
All right. Let's talk about another loan program that that's kind of new on my radar. DSCR.
So DSCR, it is a rental non-QM program.
Okay.
Starts at anywhere from 20% depending on the lender.
Now, this is for investors.
This is for investors only, and it's not for investors only. Anybody can use it. It's just that it is specifically, I guess, marketed to investors, I guess you could say.
Mm-hmm.
What it does is it's going to put you 20% down. They are going to go off the value of the property and what you can get for the rent.
Okay.
So we have to have a rent schedule done on the appraisal.
Okay.
Because that appraiser will go and find the surrounding rental comps, I guess you would say.
Sure.
And add that to the appraisal. That's where we come up with our numbers.
Uh-huh.
And that puts you in the house. There's no income docs on it. So you literally walk in with your bank statement, your ID, and a couple other docs, and we get the appraisal based off of the rental.
Wow. So if you can rent a house for $2,000 a month, you can prove that and figure it out.
It's yours.
Wow. And the 20% down on that.
It starts at 20%.
DSCR.
Yeah, don't put me on the spot to what it means. But
I
can never know. But
that's all right. So that's kind of one of those unique loan programs that not a lot of people know about. What about, let's talk just briefly about somebody that is self-employed. Maybe let's just say somebody that has a lot of tips, maybe works in a cash business, maybe in the service industry that doesn't have a big W-2 or a 1099 employee? Are there loan programs for those kind of people? I know we touched on this earlier, but let's talk about that.
Yeah, I mean, you can use the non-QM, the bank statement for that.
Okay.
And we will track the deposits going in.
Okay. Is that kind of a bank statement, Lou?
It is a bank statement.
Okay.
Yes.
Is there a technical name for that?
No, it's a bank statement.
Okay.
So, and we track the deposits. And so we come up with your income based off of your deposits.
Okay.
And if your deposits are, say, $10,000 a month, and we look at the outflows, and if the outflows are for business, then if they're not for business, we have to count against the person. But other than that, that's how we calculate that. But if they have a consecutive drop in income on deposits, then we'll take that into consideration of maybe having to look at a different way of doing it.
Okay.
But that's how we would get the income, is we would go off the deposits in the business or personal account. So
Okay.
Usually you will find a whole lot of income in that. Whole lot. Based off it's set up using a tax return or the W-2s or whatever.
Sure. So, wow, that's really cool. What is one of the minimum credit score? A lot of people call me all the time, and they may have some credit issues. They may have not a great credit score. Where, if you've got a credit score, where do people need to be for you to be able to help them?
Where do I like them to be, and where they can be, are two different things.
Okay. Where can they be? Like if
They can start at 580, but
580.
yes, and go all the way up to, I think it's 820 now. They push the goal back around a little bit, but 580 is where we can start. That will be a government loan, so you're probably going to be in a FHA loan for that.
Okay.
Now we can go lower, but it's a whole different ballgame. I'll tell you, it's a completely different set of rules.
So you really need to get at least to a 580.
Yeah, you want to be over 600 to make it easier, but 580 is where it will start.
I had a guy tell me long time ago about these credit cards and a way to increase your credit, like go to a credit union and get like a prepaid Visa and use that. What kind of things? Let's just say somebody's sitting at a 550 or a 540. Are there some things that you could guide them with to maybe help them get to that 580 or 600?
100. So 100%. So what we do is we would look at their credit report, kind of analyze their credit, see where it is. We would also then we would go through their trade line and say, well, this guy may be over his limits. We will look at, is there enough trade lines? We'll look at the rates, things like that.
Okay.
Kind of decide what we need to do. Now, if there's no credit, then we got to go find some credit cards.
Okay.
Usually that takes 45 days to get processed and back onto the credit card. Sure. Or the credit report. So, but yes, you are correct. One of the things you can do is go open up a prepaid secure card, and that will be on your credit report within 45 days. The other option is to say, if your child or good friend doesn't have credit, can I piggyback on you?
Okay.
And what that means is you go be an authorized user. Now, that person technically gets a credit card, so you have to be careful on how you play this.
Sure.
But that is another way to build credit instantly, because you're going to piggyback off the other person's credit history.
Yep.
But you also now are getting dinged for their bills. So you got to play it very carefully.
Okay.
It's just something I try not to do just because of the risk involved.
Sure.
But we have seen it done and things like that for parents and children and things like that. Yeah, that's where it comes in most play.
So somebody contacts you and says, Trey, I want to buy a house. I've been working with my real estate agent, Bill Rhodes. He's put me in touch with you. What are some of the first steps that they need to do? Call you. And then
call us. Let's get an application going. Let's check the credit. Let's verify your income. Let's verify your assets. Top 3 things.
How long does that take?
As long as the person gets us the documentation, a couple hours.
Okay.
So not too long.
Not a hard process. It's not hard to get started.
No, that is the thing. People think it's so hard to talk to us and get started, when honestly, if you can just give us an application, 90% of it is done.
Awesome.
So it's just getting those couple required docs that we would like to see. And from there, we would, once you go under contract or before you go under contract, try to get the rest of them so that it's going to be an easy process.
Man, that's awesome. Trey, as always, you are full of knowledge. Man, that was super. Wow, that was a lot of info we just covered. Thank you so much for your time today. Thank you so much for being here, man. I greatly appreciate it.
Oh, yeah, not a problem. I appreciate you inviting me.
Yeah, brother. Good. Thank you.